Welcome. If you've ever wondered how to buy your first stock but felt overwhelmed by all the information out there, you're in the right place. Today, we'll break down the process step by step, making it simple and approachable for beginners. Whether you're looking to grow your savings, start building wealth, or just learn something new, buying your first stock is a great way to begin your investment journey. Let's start by understanding what a stock is and why people invest in them. A stock represents a small piece of ownership in a company. When you buy a stock, you become a shareholder, which means you own a part of that business. Stocks are bought and sold on stock exchanges, and their prices can go up or down based on how the company performs and how investors feel about its future. Understanding this basic concept is the first step in becoming a confident investor. People invest in stocks for many reasons. The main goal is to grow their money over time. Stocks have historically offered higher returns than savings accounts or bonds, although they do come with more risk. By investing in stocks, you can benefit from a company's growth and even earn dividends, which are payments some companies make to their shareholders. Investing is a way to put your money to work for you. Before you buy your first stock, it's important to take a close look at your finances. Make sure you have an emergency fund and that you're not using money you might need soon. Investing in stocks should be done with money you can afford to leave invested for several years. This helps you ride out any ups and downs in the market without worrying about your day-to-day expenses. Think about why you want to invest. Are you saving for retirement, a big purchase, or just curious about the stock market? Setting clear goals will help you decide how much to invest and what types of stocks to consider. Your goals will also influence how much risk you're comfortable taking. Remember, investing is a personal journey, and your goals should reflect your unique situation. Before diving in, it's helpful to know some basic stock market terms. For example, a ticker symbol is a short code that represents a company's stock. Shares are the units you buy, and dividends are payments some companies make to shareholders. Understanding these terms will make the process smoother and help you feel more confident as you start investing. To buy stocks, you'll need to open a brokerage account. A brokerage is a company that helps you buy and sell stocks. There are many online brokerages to choose from, each with different features, fees, and account types. Take some time to compare options and pick one that fits your needs. Look for user-friendly platforms, low fees, and good customer support. Once you've chosen a brokerage, it's time to open your account. This usually involves filling out an online application with your personal information, such as your name, address, and social security number. You may also need to answer questions about your investment experience and goals. The process is straightforward and can often be completed in just a few minutes. After your brokerage account is open, you'll need to deposit money into it. Most brokerages let you transfer funds from your bank account electronically. Some may also accept checks or wire transfers. Make sure your account is funded before you try to buy any stocks. This step is essential, as you can't make purchases without available funds. Now comes the exciting part, choosing which stock to buy. Start by researching companies you're interested in. Look at their financial health, recent news, and future prospects. Many brokerages offer research tools and analyst reports to help you make informed decisions. Remember, it's wise to start with companies you know and understand. Stock prices change throughout the day based on supply and demand. The price you see is the amount you'll pay for one share. It's important to know that prices can move quickly, especially for popular stocks. Don't worry about timing the market perfectly. Focus on finding a good company at a reasonable price. Once you've picked a stock, decide how many shares you want to buy. You don't have to buy a whole lot at once. Many brokerages allow you to buy fractional shares, which means you can invest any amount you're comfortable with. Start small if you're new, and remember, you can always buy more later. A market order is the simplest way to buy a stock. When you place a market order, you're telling your broker to buy the stock immediately at the current price. This is a good choice for beginners because it guarantees your order will be filled quickly, though the exact price may vary slightly. A limit order lets you set the maximum price you're willing to pay for a stock. If the stock reaches that price, your order will be filled. If not, it won't go through. Limit orders give you more control over the price you pay, but there's a chance your order might not be completed if the price doesn't reach your limit. Before you hit the buy button, double-check all the details of your order, make sure you've selected the right stock, entered the correct number of shares, and chosen the order type you want. Taking a moment to review can help you avoid simple mistakes and ensure you're comfortable with your purchase. Now it's time to place your first trade. Click the buy button on your brokerage platform to submit your order. You'll usually get a confirmation message right away. Congratulations, you've just bought your first stock. This is a big step toward becoming an investor. After you place your order, it takes a couple of days for the trade to officially settle. This means the shares are transferred to your account and the money is deducted. During this time, you'll see your new stock in your portfolio, but the transaction isn't fully complete until settlement. Once your trade settles, you can track your investment through your brokerage account. Most platforms let you see how your stock is performing in real time. You can check the current price, your gains or losses, and other important details. Keeping an eye on your investment helps you stay informed and make better decisions in the future. Some brokerages charge fees or commissions for buying and selling stocks, while others offer commission-free trades. Make sure you understand any costs involved, as these can affect your overall returns. Always check your brokerage's fee schedule before making trades. When you buy and sell stocks, you may owe taxes on any profits you make. These are called capital gains taxes. If you receive dividends, those may also be taxable. It's a good idea to keep records of your trades and consult a tax professional if you're unsure about your tax obligations. As you gain experience, consider diversifying your investments. This means buying stocks from different companies or industries to reduce risk. A diversified portfolio can help protect you if one stock doesn't perform well. Remember, don't put all your eggs in one basket. Some companies pay dividends to shareholders. You can choose to reinvest these dividends, which means using them to buy more shares automatically. Over time, reinvesting dividends can help your investment grow faster thanks to the power of compounding. The stock market is always changing. Stay informed by reading financial news, following market trends, and learning about the companies you invest in. The more you know, the better decisions you'll make as an investor. It's easy to get caught up in the excitement or fear of the market. Try not to make investment decisions based on emotions. Stick to your plan, and remember that short-term ups and downs are normal. Patience and discipline are key to long-term success. Check your portfolio from time to time to see how your investments are doing. This doesn't mean you need to watch it every day, but regular reviews help you stay on track with your goals and make adjustments if needed. Stock prices can go up and down quickly, sometimes for reasons that aren't obvious. This is called market volatility. It's a normal part of investing, and it's important not to panic when prices fluctuate. Focus on your long-term goals instead of short-term changes. Most brokerage platforms let you set up alerts for price changes, news, or important updates about your stocks. These notifications can help you stay on top of your investments without constantly checking your account. Every investor makes mistakes, especially when starting out. The important thing is to learn from them. Keep track of what works and what doesn't, and use those lessons to improve your strategy over time. Some common mistakes new investors make include chasing hot stocks, investing based on tips, or putting too much money into one company. Avoid these pitfalls by doing your own research and sticking to your plan. Dollar cost averaging means investing a fixed amount of money at regular intervals, regardless of the stock's price. This strategy can help reduce the impact of market volatility and takes the guesswork out of timing your purchases. Many brokerages offer tools to help you analyze stocks, track your portfolio, and set up automatic investments. Take advantage of these features to make your investing experience easier and more effective. Everyone has a different comfort level with risk. Some people are okay with big swings in their portfolio, while others prefer steady, predictable growth. Knowing your risk tolerance will help you choose the right stocks and avoid stress. It's important to keep records of all your trades, including dates, prices, and the number of shares bought or sold. Good record keeping helps you track your performance and makes tax time much easier. Trying to buy at the lowest price and sell at the highest is nearly impossible, even for professionals. Instead, focus on long-term investing and avoid making frequent trades based on short-term market movements. A stop-loss order automatically sells your stock if the price falls below a certain level. This can help limit your losses if the market moves against you. It's a useful tool for managing risk, especially for new investors. If picking individual stocks feels overwhelming, consider starting with index funds or ETFs. These funds invest in many companies at once, offering instant diversification and lower risk. They're a great option for beginners. Dividends are payments some companies make to shareholders, usually from their profits. Not all stocks pay dividends, but those that do can provide a steady stream of income in addition to any gains from the stock's price. Building wealth through investing takes time. Don't expect to get rich overnight. The most successful investors are patient and let their investments grow over years, not days or weeks. If you're ever unsure about a decision, don't hesitate to seek help. Many brokerages offer customer support, and there are financial advisors who can guide you. It's better to ask questions than to make mistakes you could have avoided. The world of investing is always evolving. Make a habit of learning something new about stocks, markets, or personal finance regularly. The more you know, the more confident and successful you'll become as an investor. Connecting with other investors can be a great way to learn and share experiences. Online forums, social media groups, and local clubs offer opportunities to ask questions, discuss strategies, and stay motivated on your investment journey. As you gain experience, you may want to adjust your investment strategy, Maybe you'll decide to invest more, try new types of stocks, or change your goals. Regularly reviewing your approach ensures you stay on track and continue making progress. Every step you take as an investor is worth celebrating, whether it's buying your first stock, reaching a savings milestone, or learning a new concept. Acknowledge your achievements. This positive mindset will keep you motivated for the long run. Let's recap what we've covered. You've learned what a stock is, why people invest, and how to open and fund a brokerage account. You now know how to research stocks, place your first order, and track your investment. Remember, investing is a journey, and every investor starts with that first step. Stay curious, keep learning, and enjoy the process. Congratulations on taking the first step toward investing in stocks. Remember, every great investor started as a beginner. Keep exploring, stay patient, and don't be afraid to ask questions along the way. Your financial future is in your hands, and with each step, you're building a brighter tomorrow.